Hey traders, good evening. I want to do a post. Let's just stick to global macro as far, we'll just touch on the major markets. I'm back in on the East Coast here of Florida. So kind of been a long weekend. We didn't get hit too bad, thankfully. It seems like Daytona got hit the worst. So I'm still dealing with stuff around the house today. But I wanted to touch on a few markets. I think last week the big drivers, everything's connected, guys. So when we look at the markets and you kind of look at what's moving, gold was breaking down last week. The dollars kind of got through its intermediate term upside range. Pound broke to new lows. So we kind of have this very bullish dollar. Even dollar yen looks like it wants to make a move back higher. So everything's connected. And if we're going to get the next, you know, several month directional move across markets, everything has to move together. If some things are going to be going up while other things are going down, risk on, risk off type of um, the differences there. Dollar up, bonds up, gold. I mean, everything is connected. So we can look at kind of what's breaking down. But to me, sterling breaking the lows, call it a flash crash. The media likes to hype things up. Guys, this is just a market that goes no bid. When you break an all-time, multi-year low, there's not a lot of people that want to step up and buy here. All right, so you don't have anybody willing to buy. It creates what we call the market goes no bid. It doesn't take a lot of selling if there's no buyer. Somebody comes in here and says, okay, and that's a nice thing about having shorts in the market. Governments want to come in and always look for who's the who's the short seller that crashed this market. Who's the person? It's always some sinister looking for some seller. That's not how markets crash. Markets crash because there's no buyer. It goes no bid. The short sellers are the only ones that step in that have the confidence or the balls to step in and buy because they're making money. They're the only ones that are willing to come in and buy are the short sellers. You eliminate the short sellers, then you're going to have a market that's going to gap down even harder. So there's just nobody wants to bid down here when it breaks. It's so obvious. Okay, you have a few buyers at 126. Okay, well that breaks. The next person steps up at 125, 1.25, and then that fails. There's just no buyers. So anybody that needs to sell, anybody that bought 27s, bought these lows, gave it a 100 pips, even the people that bought 125 and there's no buyers, the bid just backs off. There's not enough buyers to get out of these people that want to puke on the lows, and that's what creates those moves down. The crashes are about they go no bid. It's not about somebody blasting through the market on the sell side. All right, I don't know. I just need to make that point. Anyway, so this is still bearish for cable. All right, I think that might be your long-term low. I talked about that last week. There's no real reason to make those types of calls. There's plenty of time to trade it, but that probably was your flush out. I think that was your low, quite honestly. But we'll see. Euro still a range trade. Wants to try to break down, but very, very quiet. Surprisingly quiet. If we look at dollar futures, this has been the more intermediate term range that I've been watching. So you got above pi that I was talking about, 96.5. We couldn't really close above it. But this is enough of a start of a move. Maybe this is meaningful. So we got to watch this. Dollar futures. If we can punch through 97.75, then looks like we have a new bull run there. You look at some more dollar pairs. We got long more here. This looks good. We break the TMS here. We get above 104.5, 105. Watch how quickly this can run. Everybody's long yen. This is a very crowded trade. There's lots of room to go back to at least 106, maybe even the upper bands on the weekly 110. So I like the way pies come down here. I think after this much of a move, you need to retrace. You need to retrace some of this move. So I think that's what's next. I think the positioning allows for that also. All right. I think that kind of covers FX. Gold. Gold, I keep saying longer term, this is a patient buying opportunity, this pullback, but you have to be patient. And you have to have a time frame that's you're willing to play this. Anything you buy here, you got to be holding into at least next year. So this is a longer term duration opportunity. If you're playing it from the short side, I want you to be a better seller. Now that we broke 310, any type of bounce you want to short. So it just depends how you play it. We're intermediate term bearish. It's actually been intermediate term bearish since late September. All right, but there's also plenty of this is providing a long-term buying opportunity at the same time. So I'm going to play it both ways. In futures, any type of rally, I'm going to try to go swing short, and then I'm buying the gold miners. I'm buying some of my favorite long-term silver plays on this dip also. Right. So both the gold miners and the juniors. If we get this move back to pi around 1200, that's where I'm going to really start to build a core long with some size. So that's gold. Oil, we got aggressive Friday. Got aggressive Friday. All right. And this reason being is the daily cycle finally cracked, rolled over. I think there's a lot of room for this to roll back down. I like the fact that the dollar's breaking out like we just talked about. That's not good for oil. You got back up to these highs. You actually ran through, you probably ran the stops here through everybody that just wants to trade 50 and act like something's wrong if it goes 50 cents through. Ran some of those stops. This is a bearish engulfing pattern. That's a sell setup in my model. We hit it pretty hard. And then I want to trade this from the short side on the hourly and 4 hour. Like that. S&Ps, pretty boring, kind of like the euro, to be honest. Still in a range trade. If you would have projected this forward, the market held that exactly again on Friday. So just a choppy range trade, guys. I don't know what's going to break us. I think for the U.S. market to go down, I think it's going to have to be after this election. I just don't see the real money making any type of commitments either way before. If we have, I mean, obviously if we get through these lows, 21.33, I keep saying is a trigger. Just on positioning alone, maybe we can get it moved back to 210. But this is just going to be a range trade. You just play it small. 21.60. Anytime you get up here towards pi, you can short it, cover. You can play the long side too, but it's just a range trade. All right, and then lastly, one of my favorites, bonds. I haven't been doing much in here because I talked about how there's this too is you have a lot of different trends going on between long-term, intermediate, and near-term. So it gets confusing for people, but you just have to know which time frame you're playing. I like being short up here. You should be covering. I'm playing still a long in 30s, and I actually might probably buy down here. Just not in a hurry. I've been eyeing pi. So these are my lows. This 162.5, 162 the buck is kind of where I want to start building my long and long bonds. I don't want to teach on this. I teach the coaching clients this. You know what happens when we break TMS between the TMS and pi. So you won't see me being very active because this is just no man's land. All right. On the short side, we've been still playing a flattener. Made great sales up here. You need to be covering stuff back if you're short in 5s or 2s with me. This is definitely, I'm going to actually probably get some back here once I get off this video. All right, guys, that's probably long enough for this evening. I'll talk to you in the morning. I'll be on early, and I'm sure some of you are watching this debate. I'm sure it'll be good entertainment as usual. All right, guys, have a great evening.